Good afternoon, everyone. It's Chrissy from Solstice ATR. You can find me at Solstice ATR, Instagram, Twitter. You can DM me on Discord. At Solstice, we use adaptive algorithm for illustration use only. We're not a broker-dealer. Past performance doesn't indicate future results. I'm going to cover a lot about the debt ceiling, where the stock market is in relationship. Do we get pushed over the cliff and fall apart, or do we continue on a reversal by end of the year for a Christmas rally? Let's break this down one by one by taking a step of each one. First of all, I have put a small little outline, a deadline on the debt ceiling. It is supposed to be going for vote in September, between September 11 and 13. They can extend it between 18, 19, and 20. We may have some turbulence until they do have the vote and pass it. Liquidity of assets. Is the Federal Reserve Board have their hands locked up behind their back? And can they keep the stock market on a rally or on the edge of a cliff? We have the coronaviruses in the global markets and the spikes causing a little bit pressure on the economy. Is the U.S. central banks keep buying assets, or do they stop and cause an inflation cost, as well as, the plunge protection sheet won't be buying any more, equities and cause a reaction to the market. And you have to keep an eye on interest rates, with the as well keeping it at low, at the zero line, and the VIX, if it is going to spike up or not. Some employees are forced to take vaccination. Is this a mandate, or are people coming back to their jobs and being able to continue with what's going on? The vaccination mandates that's being passed in the healthcare sectors, as well as the healthcare, some of them have immunity. Why should they take, the vaccine or not? It may be questionable. The debt ceiling is coming soon. Is the stock market on an edge of a cliff once again, or a big rally by end of the year? By this, I mean trade what the charts offer you. Don't be biased to one side, and pay attention to what is given to you and no biased. Let's go to the next slide. As we can see, I put a 2-year, the VIX here, and I went back as far as September 1st till September, where we are. If you notice, we had, the two spikes up because, that time we had, the French, there was a little bit of spikes, lockdown. There was interest rates, as well coming into elections, from the Trump administration to the Biden administration. Then we had the January lows, and the VIX spiked up. Then we had the March lows. Then we had the spike back up. Then we had the April, ever since May low. We have never revisited. We had a little bit of last week. In the last 2 weeks, we had a reaction in the market. As we can see, since October of this year, we only had, continuation to the upside with a little bit of spikes on the VIX. I am concerned about the $25 range. If we end up clearing it and staying above it, it can cause a reaction and a reversal in the stock market to the downside. This is showing you the VIX that we had lower highs, except this reaction here that we had a spike a little bit higher. Let's go to the next slide. We can see that the S&P, I put a 2-year chart on a daily as of September as well, of last year till this year, 2021. We can see that we had a reset. The 18 simple moving average has bent. The 50 simple moving average has got crossing this, what you call a death cross. We tapped into the 116 SMA, and we closed right above the 116 SMA. Was a nice reversal bar on Friday. And you can see this research is done, by LPL, shows that the historical from 1954 throughout 2021, what can we do till this year? We can see as of October 2017, we had a 5% yield. It has been very average and muted to the downside, other than the events, that happened in the 1980s, 1987, 2006, 2009, and 2017, that has happened in the overall global markets. Let's take a look at one more. We can go back to the early 1980s. We had only one event where we had a minus 5% decline in the market. Is this normal pullback in the market to continue higher? We can see we had major pullbacks, in 2008, 2001, 2002. We had some in the 1981 and 1987. Does this mean that the market is going to continue higher or not? But be open mind that on the weekly bars, you can see the SPX here has bent a little bit, but we are holding right underneath the 18 simple moving average. We are far away from the 50 simple moving average, as well as the May, the June, and the July. We tapped into the July, not lows, but part of the July. Then we reversed back up. Does that mean that 5% pullback and that 3% this week is going to cause us a reaction in the market or not? Let's go to the next slide. You can see here, is this a healthy 5% pullback? And this happened only once in an event, that kind of a pullback in October, and we eventually continued higher. And this is shown by LPL as well, this illustration. Does this mean that we're going to continue higher or not? We have been, remember we had that rainbow. I pushed that prior last time, but I didn't have, the January lows or the March or the Mays or the June and Julys. But you can see that the rainbow started to bend a little bit. We tapped into the center of it. We reversed a little bit. Does that mean we continue lower to get to the 50 SMA and Mays and June lows, or do we reverse and continue back higher? So let's go back to the slides that I have on Thinkorswim platform or TD Ameritrade. I have the three combinations of the S&P, the NASDAQ, and the Dow. You can see that we came back to the linear regression channel that is holding us here. We tapped into it and we closed right above it, but we are on the weekly chart a little bit below what we call the 18 simple moving average, which is the middle band of the Bollinger Band. Let's go to the daily chart. We're going to go time frame. We're going to go in daily instead of 5 years. We're going to go 6 months out. Instead of weekly, we go daily and we push OK. So you can see what has happened. We are in an open cone. We have reversed back to the mean. This is a very bullish engulfing candle from the linear regression down channel. We can have a cone down here, but we closed right on the 116 SMA and part of the July consolidation where we reversed back and continued higher. Does this mean we can reverse back? But keep an open mind on the depth ceiling. Let's break it down now by starting with the RTY small cap. You can see that the small cap has been in a linear regression, side action for the last 10 months since the January. We had the little bump up in February, and we continued sideways range between the 23.45 and 21.50 area, and we've been range bound. We reverted back. We were trying to break up. We fell back down. And this is a bullish engulfing candle on the weekly bar going back up. And you can see this was my last week's Fibonacci weekly fib, which we have to remove. And this weekly, we have to move it over here. This is the monthly expected move in the Russell. We are just right underneath the 61.8 or the 38.2. Depends how you look at it. If we break above the 2250, it sets us up. But if we fall back below the 2100 or the 2200, pay attention to what the market offers you. Because here we are, you can see those moving averages are in zigzag all over the place on the small cap. Let's take a look at the YM, the Dow Jones Industrial Average. We can see that the Dow Jones Industrial Average had broken from the linear regression channel that we had going back from June lows, and we fell back down. This month had been a consolidation. We created an H pattern, which we double bottom. I consider this, and this was the weekly Fibonacci for last week's. We have to take it away, take it out. We can look at it from this week's high to this week's low. I already reset it. We reverse back. Does that mean we can continue back? This is the backside of this channel that we broke down from the prior week. I kept it there, but this is no longer valid. It's already known, but I can remove it. We can see that we came back to it. Does this mean we can continue clear the 18, 116, and eventually the 50, or do we fall back inside the Dow Jones Industrial Average. Let's take a look at the NASDAQ 100. We can see that the NASDAQ 100, the expected move was to the downside. We reversed right from the July's consolidation. We were consolidated. We fell back in August, rallied back up, and we fell hard. We fell below that double. If you consider this is the head. This is the shoulder. This is the head of it. If this is the shoulder, are we coming back to clear the backside of this channel that we broke down from or not? So pay attention to the NASDAQ 100, such as Apple, Amazon, Google, Netflix, Tesla, Microsoft, the big boys in NQ, or the QQQ, which is the ETFs. Let's take a look at the ES, which is the E-mini S&P 500. We can see that we never retested that gap here. We retested the part of the July low, but we continued higher. We reversed back from that mean and continued higher. If you look at this channel, we are in a linear regression channel, but we created that reversal. Does this mean we can continue higher? We tapped on that 18, but we closed right about below that Bollinger Band, mid-band. We have this gap here, which is a professional gap. We should write it down because on the 4-hour it shows. We can go to text and write the word gap in here. Gap, so that way everybody, we'll make it capital so everyone can see it for the following week, so people can see how I do this. This is this week's fib from high to low. We are above the 38. We tapped into the 50. Does that mean the 50 acts as resistance, or the 38 on the monthly, or do we continue to the weekly 61.8 to break to fill the gap or fall back in? We are above the 116 SMA on the daily charts. Let's take a look at now the GC, which is gold. GC had a nice reversal rebound. It consolidated on Friday, Tuesday. Was a nice reversal because we saw that the dollar reverted back from the mean. Let's take a look at the gold, where it is in relationship. And this fib supposed to be moved over. I did not move it. This is the weekly fib from high to low, from the Monday through the Friday highs. Does this mean gold clears the 18 simple moving average in the 50, or do we reverse from the 1700? We have to pay for the annual high, which was the 50% fib right here on GC. Let's take a look at the dollar DXY, since we have gold up, so I can show you what has happened. This was the gold, the dollar spike up above. Then we eventually fell back in the last 2 days, and gold had a nice reversal back. If we're going to fall through this channel, does this mean gold is going to rally or not? Keep an eye on the currencies between the Aussie dollar, Japanese dollar, and the American dollar with the euro. It gives you a little bit of clues where the market is heading. Let's take a look at now CL, which is the crude. We can see crude is in consolidation. It fell a couple of days ago and reverted back. If this is considered a nice rounded bottom, which is, the head and shoulder, this is the shoulder of it. If this is another cup and this is the shoulder of it, does it mean it can continue and break above the expected move on the monthly bar in crude oil? I think I have, this was the last month expected move. Yeah, this is 9-1. This is no longer valid. I have to re-anchor my crude oil fibs. I will remove my crude oil expected move because I can see it on the monkey bars. We can go to style, standard. We can go monkey bars. We can see this was the crude expected move. If it stays above this area, we got to clear this 61.8, which is the extension to the upside. We have the 70 and 100 in crude oil. I wanted to make sure that I had the right fibs on crude. We go back to standard. And we can see that this is a nice rounded top. This is the shoulder. This is the head of it. If this is considered the shoulder, does that mean it continues straight higher where crude continues higher or not? Let's take a look at BTC. It had a nice reversal 2 days ago from that wedge. It has filled this gap. This gap is no longer valid. I usually take them out once they are not refilled. I'm going to just remove the drawing, but I'm going to keep the word gap. Every time we have a gap, I always leave it on. You can see it, but once it is filled, I know this is usually filled. I no longer keep it. I just keep the word gap there so people can pay attention. This is an open gap which has not been refilled. If this is the wedge here, we are holding the 50, the 18, the 200, and the 116 on this reversal. Does this mean BTC going to continue to fill this little gap up here on the daily chart and eventually break out, going back to the annual high and filling the backside of this channel? Or does it reverse back to the mean from the other side? I believe BTC has a little bit more momentum. It may consolidate a little bit here because it created value here before that look above and fail. It came back, retested, it couldn't go through. Does this mean BTC can consolidate above the 47,000, continue higher? Watch if it does lose the 40,150 in BTC. Let's take a look at ETH. Oops. Slash ETH. Oops, I did it again. Here we go. ETH did a similar thing. We still have this gap, which we filled most of it. You can see it. This is no longer valid. I should take that gap cloud out of the way and take this gap cloud out of the way, remove. We still have this Virgin Control gap here. We have the monthly Fibonacci on Ethereum, but we still have not filled 100% of this gap. We still have a little bit to go. If you can put this mouse, you can see that the difference in it is a little bit more to go in order to fill it. Does this mean it holds the 18 SMA and the monthly Fibonacci on Ethereum to continue higher or not? As you can see, I did not anchor my weekly Fib for this one. Remove drawing. I will do it with everyone. Right now, as we speak, we go to the Fibonacci here. What we do instead of the daily, I want to make sure I look at the overnight action. I usually use a 45-day overnight action. This is the Sunday high, and this is the Wednesday low. So from Wednesday to the high here, we can see where the high was. I edit the property right here, edit the property. I changed the color for the weekly as a gray color since it was started on the 26th. So we can go back to the 26th, which was the Sunday. You can see where the Sunday range was to Wednesday's low and the Friday high. This is our weekly Fib. As long as the Ethereum holds 3,125, we are okay because it can consolidate, create a cup, and continue higher, or it can still continue to the upside. Let's go back from the 4-hour chart time frame. We go to daily instead of yearly. We're going to go to 6 month out. We're going to go daily, and we can see where the range is in Ethereum on this wedge breakout to the upside in Ethereum. Let's go now to some of the equities. We're going to look at AAPL, see where it is in relationship. It is in a wedge. It created a reversal hammer on the 116 simple moving average. Does this mean it's going to clear the 142 monthly Fibonacci to go back to the 18 simple moving average and the 50, or do we reverse back from the mean? Remember, this coming week is going to be very important because of depth ceiling. Let's take a look at Amazon. We can see Amazon still under pressure and under the 200 SMA on the daily chart. A lot of institutions do look at the 116 and the 100, but I use the 116 instead of the 100, and the 50 and the 18, the 50 and the 200 are above on Amazon. Is still in a selling position. This means that this candle has to hold it in order to reverse back like it did here and continue, because this is part of this gap has not been filled. You can see there's a little one here. We can create a box and I can show you how it looks like. We'll do it manually here. We grab this high here to this low here, and this is a box, and that's considered a gap in Amazon. You can text it and you can write the word here, GAP. Push OK, and there it is. So let's go right now to Facebook. We'll just do a little bit of Facebook. You can see it's got a reversal island right here. It depends if it's going to hold this consolidation here, because if this is considered some kind of a funky shoulder and this is the head of it, does it create a shoulder or does it continue lower? Facebook. Let's take a look at Google. Google, nice reversal, inverted reversal bar engulfing. Does it continue to clear that 50 simple move, that 50 Fibonacci, 61 and 38, and basically the 100 Fib, and fill this gap that it fell from last week on Google or not, or does it reverse from that linear regression channel? You can see that channel that it fell from, it's right sitting right under it. Does it break above it or does it fall back? Pay attention to either side, what the market offers you, because if it gets rejection, it can fall all the way back to the 38, 116 in between this area in the coming week. I am not saying it can fall, but I'm saying this is a possibility. Let's take a look at NFLX. I like Netflix. It has been strong. I have not re-anchored my Fibonacci for the weekly, but you can see that the weekly in the last 5 days, it reverted from that linear regression up channel and it broke up. On Friday, it fell down, tested the 18 simple moving average, which is the middle band for the Bollinger Band, and bounced back up. Does that mean it clears the monthly 61 fib extension or not? Let's take a look at Tesla. Tesla is in a similar situation. Tesla is in a consolidation. It had an inverted reversal hammer back up, but right underneath the 18 SMA, underneath the 5 simple moving average, and the 18 is holding it very well. It has been retested, the 18, so many times, but did hold, but it is in a linear regression up channel, and there's a midpoint right in the center. If Tesla loses the 750, be careful of it. If Tesla breaks up, keep an open mind to the upside. Let's take a look at one more win, and I'll go over the volume profile in the ES, and I hope it is helping you guys to understand where in relationship there's a little gap in here, and when there's another gap here, and when if this breaks out of this gap and breaks out of this candle, this island reversal can continue back up to the 50 simple moving average and clears the 18, or does it fall back inside that range on when? I have to reset the fib on when. You can see this was from the prior week. I have to remove the drawing and I have to set the monthly Fibonacci's. I have not. This is the annual fibs on it, but pay attention to these two islands in here. If when can clear the 18 and clear this gap, fills this candle and fills the one above it. Because remember, the holidays are coming up and Christmas and New Year. I know we still have 3 months out, but anything is possible. Pay attention if people are traveling or not. All consumer products and manufacturing products, staples. Let's take a look at some IEF. This is the bond market. We can see that the bond market's trying to reverse if interest rates stay low. The par value of the bond, this is the 7 to 10 year bond, and you can look at the IEI, which is the shorter one. You can see the same situation. Let's take a look at XLF. We can see XLF in the financial sector, XLE. You can see it's trying to peak up. We can take a look at XLK, which is the tech sector. It's reverted back. It's inside that linear regression channel. Does that mean we can break that wedge and fill up that island on this side here in order to continue higher or not? XLV, this is the healthcare sector. You can see an inverted hammer on Friday reversal, but we are underneath the 116 SMA. Probably it is sitting right as well. The 100 SMA should be somewhere in this area, and that's the 200 SMA. Does this mean it creates a cup and handle or not, or does it reverse back from the extreme? Let's take a look at RSP. That's the Invesco. You can see it is in consolidation. It's an inside bar. It tested the low, it tested the high, but it had a medium bar inside this engulfing candle. Does that mean it holds the 116 to continue or not? SCH will do the growth and will do dividend. You can see that the gross large cap growth, it's starting to reverse. SCH, we can look at the equal dividend yielding account. You can see it is in consolidation. Last but not least, I want to do one more in General Motor, because I haven't showed General Motor for a while. You can see that General Motor is trying to stay in that linear regression. It has broken that linear regression channel, that downtrend. Does this mean it consolidates, breaks to 200, 116? Because it is holding the 50 simple moving average. It is holding the 18 and the 50. Does this mean it breaks the 200 SMA, the 116 to continue higher and fill this gap? I do like the setup on it. Keep an open mind to see what you can do in General Motor. And Ford has a little bit of issues. I don't want people, you can see it consolidated. It fell back in this week, but it has to consolidate above the $14 in order to continue. If not, you have to pay attention to it. And last but not least, let's go back to the ES. You can see where we are in relationship on the daily chart. Oops. A little bit of a mess up here. It's all good. We can see that we are in a down channel. What I want to do is create a down channel for everyone so people can pay attention to it. We can grab this high here and this one here or this one here, but you can grab that one. We can see we are in an open downtrend cone, but this is the channel that we broke below from, and this one was the prior one. See, we were in a linear regression. Eventually, the last 2 weeks, we came back to retest that area, couldn't hold it, or we fell back down, created an H pattern, and we reversed back on Friday, back above the 116 SMA. We are right on the 8, but can we clear the 18 simple moving average and 50, or do we fall back to the backside of the channel? Pay attention to what's offered to you. Let's go to style. I'm going to go on the monkey bars to explain this a little bit in relationship to where we are. As we can see that the time spent here was a little bit below the POC. And if you can take a look at the highs and lows, the expected move, when we fell down, that was the open last month, open on last month. We looked above and we eventually fell back down. And this was our low in this area. And we closed right in this area, and this is the new month that is developing. This is the weekly expected move in the fibs, but this was last month fib extension. In order to run back above the mean, we have to stay above the 38.2 fib, the 23, and the 0 line, which is the expected move from the prior month, because this is considered like the 50% range from high to low here. If you look at the high where it is right now, it was at 45, 49.50, and the low of it was 42.93.75. And you look where the midpoint is, that's the 0 line. So in relationship for the expected move, if things are going to, in the depth ceiling, be resolved, this can cause, a reversal back to the mean to the upside. If it stays in the lower distribution, it cannot clear that 50% measured move. Pay attention to what the charts give you on daily basis, weekly basis, monthly basis, with no bias. You can see where the ES is the monthly Fibonacci with the weekly expected move from high to low of this week. This is the gap that we have to fill in order to clear this linear regression channel that we fell down from. And you can create a fib, a channel, fork, whatever makes you happy, with support and resistance, and learn how to read the candles. So hope it was good for you. Hit the thumbs up. Look forward to seeing you on Discord and our website. Take care.